Here we are. So once again, we are now finishing up chapter 10 and wrapping up the last section here, which is chapter 10.3, which is the bank reconciliation. Now, once again, what is a bank reconciliation? It is definitely a way for you to keep track of every single transaction, especially when it comes to your bank account, right? We may do an okay job at recording our transactions in our own checking account, but we also have what's called an online statement. Am I right? We can, the minute we charge our card or, our bank card, or whether we make a deposit or whether we withdraw from our bank account, it's going to be posted automatically to your online statement. Now, of course, that's if you are a frequent user of online banking, where you get to check your statement balance at any given time. But another great thing about that, having that idea or having access to be able to keep track of your transactions, is one thing and one thing only. Are you having enough money in your bank? Because the number one thing that we got to do as a business is we're constantly collecting money. We're constantly writing checks out to pay out our liabilities. So you definitely want to make sure that every transaction you do, you want to make sure that you want to keep a good record of it and compare and contrast which things gone through and which things haven't gone through. So typically, when we do a bank reconciliation, it usually is an adjustment towards the end of a given period. Now, oftentimes, the best form of making sure that we have our transactions that actually clear and transactions that actually are still pending is going to be your bank statement, right? Your bank statement should be released always at the end. You have it from the beginning of the month all the way out to your end of the month. And usually what you do is you compare it to your books, because once again, you have written a check out, but what is the idea about the check? You may have sent it out, but the idea is that the other party who's receiving the check on the other end, if they receive the check, but they didn't deposit into their bank account, your bank still holds that money. And that's the reason why we have to do a bank reconciliation, right? So once again, we take a nice look at our check, right? We had this from chapter 9, right? Things that we have that to make a check valid is having a bank account, right? The person that you write the check out to, the amount, and the signature. The most important thing is the date. Now, again, most cases, oftentimes, when you do send a check out, you always want to make it available either a couple days later, because you never know what happens between the post office, right? You never know you might have gone to the office too late, that when you dumped your mail in there, it won't ship out till a couple days later. So you definitely don't want to have your check readily available for anybody to grab, because once again, the minute you send out your check, anybody can grab it and they can, fraudulate the company, right? Pretending I'm the business. But in this case, you definitely want to set your date to be a couple days in advance. So meaning, if I send out the check today, which is April 22nd, right? I want to make my check available to be cashed out by April 25th, because I need to also assume that it could take anywhere to 2 to 5 business days for the check to be received by the opposing party, right? Or the opposite party, right? Whoever I'm making a payment to. So if it takes 2 to 3 days for them to receive the check and they go ahead and deposit it, now, it depends on how big the check is. If the check is written out for a small amount, it should clear out within 24 hours. Now, if you're sending a check that's worth almost $5,000 or more, you're probably going to expect it could take anywhere from 3 to 7 business days for the check to actually clear, because it's such a lump sum kind of money. They need to double check the background. They need to verify with the other bank that is there enough sufficient, excuse my vocabulary, is there enough sufficient funds in the other person's bank account? There's a lot that goes through when you're doing accounting. And, the great thing about having the banking system is usually it takes about, a couple days to work. Now, for example, I get my paycheck, right? It's always available on Fridays. But if I decided to deposit it on a Friday afternoon at 6 p.m., what can you expect the bank to do? They will not clear until Monday. Or even Tuesday, because they won't process it until Monday, because sometimes the bank doesn't work on the weekends. So you also have to consider that as well. So the one thing about writing a check is it won't clear the instant you write and cut that check out. You have to remember there's another party on the other hand who's going to have to deposit the check. It has to clear. And on top of that, we also learned that the customer or the vendor, whoever that you're writing the check out to, they have 6 months to deposit the check. So you can be in your bank account, you can always have that outstanding balance because the other person that's receiving the check, they may not deposit it right away. They might hold it off until the end of the month to deposit it. So that's why it's always good to always keep track of your transactions and making sure which ones actually cleared and which ones didn't. So that's just that part right there. So once again, the one thing about having a check register, it allows you to keep records of all the checks that you've written now. All right. So again, if you've ever been old school and had a checkbook, usually you'll have that little extra piece of paper that looks like a bunch of grid lines. That's your ledger right there. That's your checkbook ledger or register, whatever it is called, okay? And that's where after you cut your check, you're going to write the date in there. You're going to write the check number that you written out. You're going to write who you wrote it out to and the amount that you wrote it out for. That is how you can keep your checks in order, but also at least be able to know how much money you actually written out. Now, that's also the same thing here in a real business, right? If you are writing out manual checks, there you go. You would have to create some kind of system for you to keep track of the checks that you've written out. Or if you are printing out your checks, same idea. You need to have some kind of check register or even a checking ledger to keep track of exactly where that check went, when you wrote it out, right? Because this is going to be very, very, very pertinent to completing the bank reconciliation. This is where you can verify all the dates with all the check numbers with the amounts that cleared. Okay? So that's one idea. So after you've written out your check, you should keep some kind of track of your checks that you've written out by filling out a check register, ledger, whatever you call it, right? Now, of course, once again, if you are doing a manual checkbook, you should have some kind of place to put it, okay? And then we're going to talk about the bank statement. So this is not really what a bank statement looks like, but you got the general idea. So usually the bank statement's going to give you a few details. It's always going to start with your beginning balance that you should have in your bank account as of the beginning of the month. And then it's going to give you your ending balance that you have for that month. Usually statement balances usually are typically 1 month long, right? You could go to your local bank and collect it, right? If you're doing paperless statements, you can easily just access that through your online banking at any given time, and they should produce the statement there on your website. And you can even print them out at any given time too, right? Or you can actually just go down to the bank itself and just ask for a statement, and they will always provide it for you, okay? But usually the bank statement kind of gives you a tally of what money that you've either deposited, money that you've written checks out that cleared. So this is usually what would happen on there, right? You got your bank balance in the very beginning, right? Then you're going to have a section where you've either made all those checks that you've written out, right? With a check number, right? Because once again, your checkbook should be linked to your bank account with the associated check numbers usually located at the top. So it's going to tell you which checks actually cleared. Okay? So once again, the checks that you write out, the ones that cleared means that the recipient of the check deposited the money and it took out from your bank account immediately. All right? The checks that you've written out, which are called outstanding checks that you've already written and sent out, but the recipient never received it yet or hasn't deposited into their bank account yet, then you have those outstanding checks that are still pending to be transferred through the bank account. Okay, so that's one thing here is that this section tells you, well, which checks actually cleared. All right, so remember the date that you wrote the check out is not going to be the same as whatever amount that they taken out of your bank account because it depends on who received the check. Okay. Then you're going to get another section here which allows you to view all your either your check or cash deposits, right? So you're going to see your deposits, right? Usually you'll get some either some deposit slip number or a transaction code. But in this case, I just made up random numbers saying, okay, this is deposit number 4,425, okay? I have the date written on when I deposited, and I have the amount. And it should actually tell you whether it was a check deposit or a cash deposit. Now, once again, those kind of things, right, it's going to appear on your account just accordingly. It should tell you that it is a deposit. All right? And then other things that you're going to also find on your bank statement will be any bank charges. So once again, when you're dealing with a business, if you use the bank, right, to produce the checks for you, usually that's going to be an additional fee to the banks. Sometimes they offer free checks, but sometimes they don't, okay? Especially if you're using some kind of like if you're using QuickBooks, for example, to help you print out these checks, then there you have to pay a service fee for that, okay? If for any reason you decide to write a faulty check, meaning you didn't have enough money in your bank account, and you wrote the check out, depending on how nice your bank is, they either push it forward, but because you wrote a faulty check, they're going to fine you for that. Now, depending on what your bank is, so for example, my bank, I bank with Bank of America. If you overdraft or over withdraw too much money out of your account, you automatically get $35 charge. And then any day after that, you get $35 on top of that. So you're going to keep owing more and more and more money until you put back money into the bank account to reflect that you have at least 1 penny in your bank account. So with that, my bank is not very nice. And you can expect that most business banks are going to not be very generous to you. So any bank charges, so whether it's you writing an NSF, which means non-sufficient funds, meaning you didn't have enough money in the bank, all right? If you deposited a check that bounced back, you actually get charged for that as well because you entered in money that bounced back or didn't exist. So therefore, you get charged for that, okay? And other things too, like in case you did write an NSF check, but it bounced, you also get charged for that as well. Overdrafting, you will get charged for that. So there's a lot of minor bank service charges that you may have to deal with, and usually it will tell you in your bank statement. Okay, and it will tell you when it charged, and it will automatically take it away from your bank account without you even having to make a payment to it. It's going to automatically take it out. Okay. Other things that you can also collect too is you can collect interest, and you also can collect what's called an auto clearinghouse. Now, an auto clearinghouse is when you are dealing with EFTs, right? Electronic funds transfers. So when it clears, you can also, get money out of that too. Interest is in case like you can set up, like for example, if you set up, if you, what do you call it? If you set up an electronic funds transfer and you charge your customers an additional fee for that, for the whole convenience charge, that's going to be considered either extra income to you or an auto clearinghouse, or you can have it as interest, right? So for example, if you have notes payable and they pay you online, you can charge them, a percentage because they owe you the money and they're promising to pay you back, but you are allowed to charge them interest. You can collect the interest off of that as well. Okay, so those are a few things there. Or of course, if you have bank bonds or anything like that, you can also collect interest off of that as well. So that's that section there. Now, not all the time will you have interest or an auto clearinghouse. It just depends on how you're doing your business. And honestly, these are just few things that you should be aware of that sometimes you will see on your bank statement, but sometimes you won't. Okay, this could be something extra that may be on your on your bank statement. Okay, so those are the few key terms right there. So once again, EFT stands for electronic funds transfer, NSF stands for non-sufficient funds, ACH stands for auto clearinghouse. Okay, so those are what you would typically see on a bank statement. All right, any questions so far?
No.
All right, and then last but not least, you have to have this because this is your books. This is your way of keeping track of your own checking bank account, cash ledger, whatever you want to call it, right? It could be a cash ledger, it could be the banking checking ledger, whatever it is, right? It allows you to keep track of your own financial, your own finances, right? So allowing you to, if I wrote out a check, therefore I took money away from my checking account. If I deposited money, then I added money to my checking account. This is a ledger that you should really, really update at all times, because the best thing about this is it allows you to see what your bank balance is at all times. So it also helps you prevent you from writing those bad checks, because you just take one glance at your checking account, verify that you actually have enough money to write the check out, and go ahead and proceed with that. Now, in most cases, if you're like one of those major businesses that likes to cut checks all at once, then this is where the danger goes into getting that NSF fine for many reasons, right? Because if you're writing like 30 checks in one day, boom, 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 and you're all sending them all out with that one key factor, if you don't know when a person's going to deposit their money or collect it on the other hand, you can be, you're more likely to get an NSF there. So then, as an accountant, you are strictly going to be responsible for keeping a cash, checking, banking, whatever kind of ledger to make sure that you have enough money in your checking account at all times. So we're going to take a look at this when we dive into our fictitious business, right? We're going to look at this very, very carefully because, once again, it's very important what you're doing with your money, whether you're writing a check or whether you're depositing the money that you got from sales or something. So this is definitely going to be in your books. Now, what's the point of having a bank reconciliation? Well, like I've mentioned before, right? Your whole purpose of a bank reconciliation is to match your books against the bank's books, okay? Because there's always going to be one thing that you know that the bank doesn't know, or the bank knows something that you don't know. So it's very general rule of thumb. You should do this at the end of every single month, just so then when you start your next accounting cycle, you can start off on the right foot, or making sure that you're aware that you have a pending check that hasn't cleared yet. And that's the whole purpose of the reason why we need to compare our bank statement to our cash ledger or our checking ledger. Because one thing first is, in my books, I may have said, oh, I deposited all this money and I've written all these checks. But the bank may not be able to clear it out on the time that you've done it. Okay? So once again, when we assume, like I've mentioned before, if I had a paycheck and I decided to deposit at 6 p.m. on a Friday night, it will not clear until Monday or even late Tuesday, because the bank sometimes doesn't work on a weekend. Okay? So with that being said, therefore in my books, I should have whatever my paycheck is, right? And I might be spending stuff all over the weekend. But in reality, my bank statement or my, online banking, it's going to show that I have $0 because it never cleared it until the next business operating day, which is Monday. And even then, they process it Monday, and then it will appear on Tuesday. So that is one of the things that you need to know, is that just because you assume that I made the deposit now, I made the deposit on that Friday, that doesn't mean the bank is going to recognize it on Friday. The bank can recognize it on that Tuesday or the Monday, the start of the business day, which is Monday. So they're going to recognize, okay, well, you made a deposit on Friday, but the money will not clear until Tuesday. So that is definitely something that that the bank doesn't know, right? I know I should have money, but the bank doesn't recognize it. Okay? Now the flip in reverse, right? The bank knows that they charged me money. They know that they charged me money for using the bank as a service, all right? Or if I made those charges, right? When I thought I had money, but I didn't have money, right? The bank's gonna automatically say, ha, you have $0 in your bank account and you decided to use your bank card and charge $50. So I'm gonna charge you a fee for that because you didn't have enough money. Now, do you know that? No, because you think you have the money, but you really don't. So the bank is going to charge you, and that is exactly why we need to come together and we need to resolve what the bank doesn't know and what we don't know. So in this case, I make it really easy and really simple for you guys. On the bank side, you're going to be dealing with two things, okay? First off, well, before we deal with those two things, you always want to start with your ending balance that the bank statement is reflecting, okay? Then you're going to add any deposits that have not cleared yet, also known as deposits in transit, meaning you deposited, but it's right now currently being processed. It's not cleared yet. So deposits in transit. So therefore, you're going to add that in there because this is money that will appear on your bank statement, but hasn't done it yet. Then you're going to subtract any outstanding checks. So once again, if you wrote a check, but the opposing person or the other person hasn't received it yet or has received it but never deposited in their check, that's going to be considered an outstanding check, meaning it's pending for the other party to deposit into their bank. So that's considered going to be an outstanding check. Once you take your ending balance, you add your deposits in transit, and you subtract out your outstanding checks, you're going to get what's called a new ending or an adjusted balance. And this should be equal to what says on your cash ledger. Okay? So at the end of the day, your bank statement should be equal to your cash ledger. Now, let's take a second and look at the cash ledger. You're also going to start out with your ending balance. Okay, that's always first. You're going to add any interest or any auto clearinghouse that you've collected, right? Because that is income to you. All right? That is money that is yours. Okay? And then you're going to subtract any fees. So any service fees, any bank charges, anything that you've done wrong. Like if they charged you for an NSF, you're going to have to report that, and you're going to have to subtract it out from your amount. So we're going to start with our ending balance. We're going to add any money that we've earned, and we're going to subtract any fees that we've encountered. Okay? And then you're going to get a new ending adjusted balance. And once again, the goal is at the end of your bank reconciliation, your bank and your cash ledger must match. And if they don't match, you got to keep digging, because at the end of the day, you need to find where that discrepancy is, where that hole, where that missing money is. You have to find it, because one thing must hold true. You have to start the next accounting period with matching bank statements. Because if I'm missing money, right, and I just go ahead and proceed going on forth, where would that money go? I don't know where it went. Even if I never looked for it, anything can happen, right? Someone could have taken money from the company. Someone could have frauded you. Someone could have infiltrated you and started buying a bunch of random things. You wouldn't know until you investigate where that extra missing money is, okay? So that is one of the things that you have to deal with when you're dealing with your bank account, and et cetera, okay? Any questions in regards to understanding this concept? Because we will take a look at an example.
No.
All right, let's go ahead and dive right into the example. So once again, you're going to have these worksheets, or at least a similar looking one, okay? You're going to be either figuring out the bank side or the cash side. Now let's just go ahead and take a look on one side at a time. So I'm going to focus on the bank side first. So we're going to start off with our very first thing is, what is our ending balance on our bank statement? So let's take a look at our bank statement, right? Usually it should be at the top, right? It should tell you what your bank account is, your etc. information, and it should give you your ending balance. It should give you your beginning balance and your ending balance. So in this case, what is my ending balance in my bank account?
94.46.
Yes, 90.46.40. So boom, you're going to place it right there in your ending balance section. All right? Now, the first thing we're going to do is we're going to add our deposits in transit. So this is where we're going to compare our cash ledger to our bank statement. Now, usually you'll have a deposit slip or a deposit ledger. So let's go ahead and take a look at that. So if you do have one, even better. Most cases you will have one, most cases you won't have one. It just depends on how accurate you want to look at your deposits, right? Or how you keep track of it, right? So in this case, on the left side I have my bank statement, and then on my right side I actually have my cash ledger telling me exactly when and what I deposited. So in this case, I have my deposit slip numbers, okay? And on my bank statement, I have what actually cleared. So let's take a look, okay? Did my deposit 4421, did it go through?
Yes.
Yes, it did. What about my deposit 4422?
Yes.
Deposit 4423?
Yes.
Deposit 4424?
Yes.
Okay. And deposit 4425?
Yes.
And then lastly, deposit 4426.
Yes.
So then, which one am I still left with?
4427.
4427. And why is that? I deposited at the end of the day, at the end of the month. And like I said, if it's at the end of the month, right, it's possible that it won't appear until June, right? Because May 30th is the end of the month, so it won't show up until June 1st or even June 2nd, depending on what the day of May 30th was. If it was a Friday, it won't show up until 3 days later, June 3rd. So in this case, I deposited the money a little too late. Didn't give my bank enough time to process it. So in this case, my deposit in transit is deposit number 4427 for $254.52. So right there, I recognize my deposit 4427, and I'm going to add this money into my bank account because I've already deposited it. It's just pending to clear. So there you go. All right. Now the next thing I got to do is compare my outstanding checks. So once again, the bank side's going to look at all the checks that cleared, and then here's my check register, right? The little chart I use to keep track of all the checks that are written out with all the dates and all the amounts. So in this case, let's compare. Did check number 125 clear? Yes. Check number 126? Yes. Check number 127? Yes. Check number 128?
Yes.
129?
Yes.
130?
No.
No. No. It hasn't, but check number 131 cleared. All right? And that's it. So let's look at my check ledger. I still have 130 outstanding. I still have 132 and 133 that hasn't cleared yet. So therefore, I need to, since I've wrote those checks out, right, on my books, that means I need to automatically assume that those are the 3 checks that haven't cleared yet because either I sent it out on that day and the other party hasn't received it yet, or they haven't deposited into their bank account yet. So here, I recognize my check 130 for the 846, the check 132 for the 1125, and the check 133 for the $245. And that's going to give me a grand total of the 2216.96. And because we're going to subtract out our outstanding checks, because it's money that should have been taken away from my bank account, right? So now we have those 3 things there. So let's go ahead and take my ending balance. We're going to add the $254 and we're going to subtract out the $2,216. And what should be my ending or my adjusted ending balance?
748396.
Perfect. 748396. Now, just because you got this number, that doesn't mean you can assume that you're done. Because if I do my check side or my cash ledger side and they don't match, you got to go find where that discrepancy is. Okay, so hold on to that number. We're not done yet. So now we've completed this section here, right? Now we can go ahead and move on to our cash ledger. So the first thing we're going to take a look at is our ending balance in our check ledger or cash ledger. Okay, so here's our cash ledger, right? This is our books. We're going to take a look at our ending balance. So what is my ending balance as of May 30th?
7338.
Correct, 7338. I'm going to pop it in right there. Okay, now let's take a look from the ending balance in my cash account to my ending balance in my bank account. Right? Significantly different. Right? So now that we're kind of roughly taking an estimate right here. We're roughly missing maybe like $100. Okay? So let's go ahead and take it. The first thing is we're going to add our interest. So let's take a look at our bank statement. Now the interest is going to be including the auto clearinghouse as well. So we got $15 of interest and we have $215 worth of auto clearinghouse. So we're going to go ahead and add those 2 values together to give you a total of $230 that you have to add to your cash account because it's money that you've earned. Okay. Now that we got that out of the way, now we have to deal with our fees. So any service charge, any returns, any fees like that, NSF fees, right? Then we're going to go ahead and take a look at that. Once again, my bank statement tells me at the very top of this page right here, it tells me I have a service charge of $50 and I had a return check fee which cost me $35. So 50 plus 35, right? So we're going to list those items out here. And we have to take away $85 because they already took it away from your account automatically. They already charged your account. So in this case, what is going to be my new adjusted ending balance? So we take our ending balance, we're going to add the 230, and we're going to subtract out the $80.
It's going to match your adjusted balance on the left.
Good. So ding, ding, ding. My bank and my cash ledger match on both ends. So that means I am done. I successfully completed my bank reconciliation. All right. Any questions in regards to this?
No.
Okay. So of course, when we're dealing with this, we also have to journalize our section because, right, the bank statement doesn't need to journalize anything. We need to journalize our books because we have to recognize that my checking account or my cash ledger has changed because of these things that I didn't know that the bank has charged me or the bank has accrued for me. So in this case, I need to update my checking account by adding the interest income that I've collected, right? Your auto clearinghouse and your interest is going to be income to you. So in this case, I'm going to increase my checking account by the $230, right? But I'm also going to say that the bank also charged me for having services, right? So therefore, I have a bank service charges or fees, right? Whatever expense account you want to use it as, right? It's the expense of doing business. You're going to recognize that you have to take $80 away from your checking account, okay? And that's what you have to do at the last end of your bank reconciliation is you need to adjust your cash ledger accordingly, okay? And that's it. So chapter 10 review, once again, yesterday we got to take a look at 10.2. So here it is. You got your formulas right here. I gave you your formula for your simple interest and the formula for the compound interest. And look what I did for you guys. I even entered in the Excel computation for you for the compound interest. So right there, it's P times 1 parentheses 1 plus parentheses R divided by N, close parentheses, caret, open parentheses, N times T. Okay. All right, so that is that. Now, I've also even made a mnemonic device for you guys to know how to be able to compute your bank reconciliation. So once again, if you're dealing with your bank side, you just have to remember you got to do, right? You got to do, which is your deposits and transits, and you got your O's, which is your outstanding checks. Okay, so on the bank side, you're always gonna do, but on our side, on the cash side, you're gonna always have ifs. Ifs is gonna stand for your interest or auto clearinghouse, whatever income, and you're gonna subtract out your fees, which is your service fees, NSF fees, whatever it is. So you're always going to have ifs when you're dealing with our cash side. And at the end of your bank reconciliation, your ending adjusted balance must match at all times. Okay? So once again, you got bank, you got to do. If it's us or cash, it's ifs. Okay? All right. Any questions? So let's dive right into our first problem of the day, which is, I guess it's this one. I thought I opened the second one, but I didn't. Let's actually open the first one. I don't know why the first one didn't pop up. Okay, so the first one is going to be problem number 1. So go ahead and open up your bank reconciliation problem 1. Okay, so the first thing that you should see is basically a copy of your checks. It says checks that are canceled. Ignore that. This is just so that you can see your checks that you've written out. Once again, usually you should have a copy of your checks or at least a copy of your checkbook. So if you keep scrolling down forth, right, if you pass all those checks, you're going to see your bank statement, of course, right? A perfectly looking good bank statement, right? Underneath that, you have your checking ledger or your cash ledger. I think I put checking. No, I did cash. And then underneath that, you have your check register, right? So a list of all the checks that you've written out. And you even have a list of all your deposit slips that you've, deposited into your bank account. All right. And then last but not least, here's your little chart for you to go ahead and compute your bank reconciliation. Okay. So which side do you want to start with first? You want to start with the bank side or you want to start with the cash side?
Cash side.
All right, let's go ahead and start with the cash side. So first things first, what is our ending balance in my cash side? Let's go take a look at our ledger. Okay, what's my ending balance?
$775.
775. Even yes. Okay, so the first thing I'm gonna write in here is 775. All right, boom. What do I need to add on my cash side?
Deposits?
No.
Interest.
Interest, yes. If it's cash, we do our ifs. Or we have ifs. So in this case, interest is first.
We're
So-
doing 10-3, right?
This is 10-3, problem number 1.
Oh, I didn't see it given problem number.
Yeah, at the very top it should say problem 1, and then the other one's problem 4. Okay, do you need a minute?
Yes, please.
Okay.
Yes.
Yes, I do.
Okay, perfect. So once again, I forgot who wanted to do the cash ledger side, so we're doing the cash ledger side. So first thing the first we got to do is determine what our ending balance is on our cash ledger, which by taking a look at our ledger account, right, we could see at the end of August 31st, we should have an account balance of $775. Okay? Now, the first thing I asked you was, what am I going to add on my cash side? So here we determined that it needs to be interest, right? Felipe said interest, all right? So let's take a look at our bank statement. Okay, here it is, all right? Usually interest is going to be the last thing that's going to be added in here. So what does it tell us here? How much interest did we collect and how much ACH did we collect?
$50 interest and $250 ACH.
Perfect. So once again, I'm going to go ahead and go back down to my ledger. So I have interest, right? It's at the, okay, so I have interest. Right? For $50. And I have ACH for $250. So in grand total, how much am I going to be adding to my cash ledger?
75.
No. Adding. 300. Perfect. Okay, so in this case, I'm not doing it like how I debit and credit my system. I'm utilizing the workspace so that I have one area to calculate my total amounts. And then on the right side is going to be my actual total amount. So here I have 775 and I have 300. Okay. What am I going to subtract?
Any checks that have been processed?
No. Okay, we're on our cash side.
Hold on, cash.
Service charge and insufficient funds.
Correct. So let's look at our fees. So let's take a look at our bank statement. What did our bank charge us?
$20.
They charged us $20 for services, but what about my NSF? I wrote a faulty check. They charged me $10 for writing a faulty check. Now, oftentimes, what's going to happen is if it's such a small number, your bank will process it for you and pay for you. All you have to do is just pay that money back, and they just charge you money. Now, if it's a large amount, such as, $1,000, they're most likely going to bounce the check and say, sorry, it didn't go through. Okay, so you want to also be aware of how much money you actually have. So in this case, I have service charge, okay, and I have NSF. Okay, so again, my bank charged me $20 and my NSF was $10. So in this case, what is my total amount that I'm going to be subtracting out? 30. So let's go ahead and take a minute to go ahead and compute this. So if I had a total of $775 and I collected $300 of interest and I was charged $30 for all the fees, what is going to be my total adjusted ending balance?
1045?
1045. Perfect. Okay. So let's hold on to that number because that number may not be accurate. Right? So let's go ahead and take a look at our bank side. Okay. First thing that we got to figure out is how much is my ending balance in my bank account. So let's pull up my bank statement. What's my ending balance?
$1,055.
$10.55. Okay. So I'm going to go back down here. And I'm going to recognize I have $10.55 in my bank account. Okay. So here, what am I going to be adding?
Deposits?
Deposits. Okay. So first thing is, let's take a look at my deposit slips or my deposits records, right? So this is the best way that you could do it, right? You can actually take a look at how many deposits you actually made in general. So in this case, I made 1, 2, 3, 4, and 5 deposits in grand total. Okay? And then I'm going to go scroll up to my bank account and recognize how many deposits actually went through. Only 4. So if I have 4 that only cleared and I had 5 total deposits, then you can go ahead and go through each one. Right? So you have 100 deposit, 350, 400, and 225. So let's take a look at our deposits. We got the 100 here. Boom, that cleared. We got our 350. Boom, that cleared. We got our 400. Boom, that cleared. And 225 was the last thing that was deposited in our bank. So therefore, what am I left with?
$30.
$30 deposit, and this was made on August 30th. So here you could put the date. Usually you'll have a slip number. So in this case, it's just the date. So August 30th, right? I had a deposit for $30. In this case, I only have one, so you could just go straight ahead and just move it over here. And I'm going to make sure I recognize this is deposit. Okay. For $30. Okay. Now, what's the next thing I have to do?
Check the deposits that went through.
Not deposits.
Withdrawals.
not withdrawals.
Checks that haven't paid.
Outstanding checks, your O's, okay? So outstanding checks. So here, best way to do it is count how many checks you wrote out. So here's my check register, all right? Here I wrote a total of 1, 2, 3, 4, 5, 6, 7, 8 checks, all right? Now let's go ahead and take a look in my bank account and see how many of those checks actually cleared. 1, 2, 3, 4, 5, 6. And automatically, that means I'm missing 2 checks. Now it says NSF here because this is the check that I wrote out that I didn't have enough money in, but it cleared anyway. So that's just to let you know that's why you got charged the NSF fee. Okay. Now, if that check were to bounce back, you not only will get an NSF fee, or you're more likely to get a return check bounce check fee, and then you're going to get the check amount that you were bounced back for. But in this case, this NSF check that I wrote, it cleared because it was such an insignificant amount. All right. So let's take a look. Let's take a look at the abnormalities in the check numbers, right? I got 101, 102. Oh, I'm missing 103 because it jumped right to 104. 105, 106, 107, and 108. I'm sorry, 106, 107, and what do you know? I'm missing 108. So automatically I can tell by looking at the discrepancy between the numbers that check 103 and check 108 did not clear. So let's take a look at my check numbers. So how much was my check for 103 worth? $20. What about my check number 108? Another $20. So here you're gonna less check number 103 for $20, and you're also going to do check number 108 for $20. So therefore, in grand total, you're going to be subtracting out $40 from your checking account. So let's solve for my new adjusted ending balance.
Got 1125, but it's the parentheses minus because we haven't paid that yet.
No, that's the money that's supposed to be taken out already.
Okay.
10:45?
1045. Right? Because if you look on the side, right, it says you're going to add and you're going to less. So if you're going to add this much, you're going to subtract this one. That's what the less stands for. Okay? So boom. 1045, and does it match my cash ledger?
Yes.
Yes. So here we successfully finished our bank reconciliation for problem number 1. Any questions? Okay. So